Okay, so we'll start with today's class, as we have most of the students already online. I hope the rest can join in the next few minutes, but we'll get started since it's already 7:30. Most of you were here last week. For those that weren't able to attend last week, we just did a short introduction of the course, and we reviewed and I gave you an idea of what M&A transactions meant in terms of size worldwide, globally, in terms of sectors, what were the trends, and a little bit of what outlook was, let's say, expected for the following months or year, given the current situation. This class, that was just generic information, just so that, just to give you like some context on M&A, and so you have an idea of what it means in terms of size, deal volume, and magnitudes worldwide, and hopefully you get some better ideas as well, regionally and locally. Okay, today's class, we will focus on a specific case study. I will give you some generic information once again on M&As, on mergers and acquisitions, on why do we do M&A, what's the strategies that companies undertake behind the rationale for doing, let's say the rationale, generic rationale for doing M&As, and we'll review quickly, briefly, a timetable, a typical M&A timetable, so that you have an idea of what an M&A process is structured like, and we'll come back to this timetable many times during our course. I think we will more or less follow the structure of this timetable, and it will more or less guide our course throughout the semester. And finally, we will review a specific case study. I chose in this occasion to review the Falabella Maestro case study. For all those of you that are either Peruvian or know the country well, you know perfectly both Maestro and Falabella, and hopefully most of you were aware and were informed about the transaction that happened a couple of years ago in the home improvement sector. Okay, so this is more or less how the class will be structured. Similar to last time, please, if you have any specific questions or any comments, please go ahead and write them in the chat. I will try to be following the chat as we go through the course. And if not, I'll give some minutes either at the end of the hour or the end of the course to review the questions and go through them. Okay? So let's start with our class today. As I told you, we will start with, I will cancel the video as they tell me that it's better for the connection and for transmission of the slides. But whenever we come back to conversation or explanations, I'll put the video again on. I think, and at least you get to see my face and have a direct view instead of just my voice in the background, okay? So we'll review the presentation now. Hopefully you can see it well in your screens. I will focus or zoom in whenever we need to. If not, I will describe the slide anyway for everyone's information in case you don't get to see it properly, okay? So what are the key drivers for M&A? Why do entities, companies, entrepreneurs decide to go through an M&A process? Why do they decide to either sell their company or buy a company or buy a business, sell part of their business, etc.? So here you have some ideas. In the gray color, you will see some of the key drivers. The first of them would be probably business growth. Entities or companies that already are present in a market and with a specific business, and they want to grow their business, and maybe they want to grow it quicker than what organic growth allows them or in the market. So they decide to acquire a company to compensate for this, or to, let's say, add to their strategy, or to include other businesses, or to consolidate. So some business growth strategies to strengthen or consolidate their current business, given market opportunities, to enter a new business segment, or to enter a new market or region. You can decide to grow your business by acquiring similar businesses in other countries, or enter a new business segment in your same country or in another country, or for specific market opportunities, given legal situations, for example, changes in regulation, or because a company might be a little bit in distress for particular reasons, and you want to benefit of that opportunity in the market and potentially acquiring that company at a lower price that you would normally do, or simply consolidate your strategy, strengthen your company by, for example, acquiring a competing business or a competing company. Another reason, and these are all, as you can see, or most of them, are for thinking more in the buy-side position. You can either be on the buy-side position or on the sell-side position, to acquire or to sell a business. Obviously, in a transaction, there is both buyer and seller. So these are more or less thinking on the side of the buyer, but obviously they will have a seller behind this strategy, which will provide them for that business growth. To improve profitability, again, here it can be either acquire a business to improve profitability, or sell a business segment that is not profitable, and that by selling them, you will improve the profitability in your business as well. Businesses that are not going well, for example, so you could divest non-strategic assets or divest non-strategic regions. Or you can sell here to find a strategic partner or a financial investor. For example, you might decide to sell a portion of your company or a stake in your company, a percentage of your company, to either a strategic partner, who is someone that already manages similar business in another country, for example, or in your same country, but will provide your company with knowledge and with expertise, and will allow you, for example, to take your company to the next level. Or you could allow a financial investor to enter into your partnership or into your company to bring money, for example, for growth. They might be interested in acquiring a part of your company and putting capital to get money in the future together. These are the usual cases for these type of transactions, are usually done by private equity firms, which are mostly financial investors that put money, join your business, and in exchange of usually minority stake. This is changing. Usually now we have many different types of private equity firms. Now some of them interested in 100%, some in majority, but mostly the strategy of financial investors was to be a little bit more passive and contribute more financing or funding the company for growth, and providing some strategic advice, but mostly financial. Okay? How to finance growth, where this could be an option. Also could be selling a stake in your current business. Also, it can be financing your company, raising capital, or raising debt, which is equity capital markets or debt capital markets. So this is raising equity, and this is, for example, issuing bonds or commercial paper, any financing that can be done in the market. Other strategic decisions that can be taken regarding M&A could be to exit a specific business. So not sell your whole company, but sell a business that either is not going well, or you might see that there is not enough growth for that segment or business within your company, or you might decide to continue or not with a specific partnership. So these are some of the drivers for buying or selling a company. Included in this is also the situation of entrepreneurs that create their own business and then decide to go to a market and sell. They can do it through an IPO or raising capital, or they can do it letting partners in, either strategic or financial investors, or they can sell 100% of the company to a competing player, to a strategic company that wants to enter the business, the country, etc. Okay, so here you get a good idea of what the key drivers are and why does M&A happen constantly, because it's a way of allowing your company to evolve and to continue to grow, and sometimes it's the way to allow it to grow quickly. Okay, what are some examples of these different drivers mentioned? So, for example, some examples, and I tried to bring it down to a local market, but with some international players, so in benefit of everyone in the group. So, for example, for the divestiture or sale of non-strategic assets in the region, we have some examples of transactions that have happened in the local market and some in the regional market, okay? HSBC, for example, that decided to sell their operations in Colombia, Peru, Panama, Paraguay, and some countries in Central America, okay? ING, this is obviously a global bank based in UK, and with a strong operation in Asia as well. ING from the Netherlands, they sold their operations in Peru, Mexico, Chile, Colombia, and Uruguay a few years ago. Here they had mainly pension funds and insurance companies. These were regional transactions, so they were selling assets or companies in different countries. They continue, HSBC continues to operate in many other countries worldwide, as well as ING, obviously, but they sold some assets in specific regions, both of them following the financial crisis in 2008, where the European Commission and the central banks of their countries, for giving them, to give them financial aid, require them to sell non-strategic assets and non-strategic regions. Some of these operations were highly profitable, but given the situation that they had at that time, in order for them to receive the financial aid, they were required to sell their operations in many countries. Okay, so these are divestitures or sales of assets or regions of some companies. Duke Energy, they sold their operations in Brazil, in Peru, and some countries in Central America. And BBVA, also a Spanish bank, they sold their pensions operations in Peru, Chile, Mexico, and Colombia. There have been many financial transactions, banks, insurance companies, pension fund companies, selling in the region after a financial crisis. So this is why we have many financials in the examples. Okay, I tried to include relatively recent transactions, let's say in the last 10 years, 15 years. Not really old transactions, okay? Another driver or another strategy, let's say, is to sell to a strategic partner or to a financial investor. So this one was large companies selling some of their assets. This one is smaller companies looking for a strategic partner or a financial investor to enter their company to provide them capital for growth and to provide them strategic advice, knowledge, expertise, etc. So we have, in this case, Vida Security, which is an insurance company in Chile that acquired majority stake in Protecta. Protecta is an insurance company as well in Peru. They are mainly focused on life insurance in annuities mainly. Then Carlyle, which is a private equity fund worldwide, large private equity group investing in Liderman, which is a security company in Peru. We have the Abrash Group, which is also a private equity group that invested in Acurio Restaurantes. Acurio Restaurantes is the restaurant group of Gaston Acurio, very well known by Peruvians and hopefully as well by some of the international students. And we have Parque Arauco acquiring as well Mega Plaza in the Parque Arauco, also a Chilean group investing in a local Peruvian shopping center mall company. So all of these are strategic or financial investors entering in partnership with different groups where the previous owners or the owners of the group remain in the partnership at least for some time, okay? Then exiting the business, so selling 100% of the business. We have some examples. We have the first one, Alvis and Arcangel, is an acquisition in the pharmaceutical industry. They were acquired by the group, the largest group in Peru of pharmacies that was then acquired by, later on acquired by Inca Pharma. We have Angel, which is cereals that were acquired by Alicorp, the largest consumer company in the country as well. Alicorp also acquired Sayon, which is a brand of, it was mainly cookies and panettone and some sweets. Then we have Bembos, which was a very popular fast food restaurant company or hamburger company. They were acquired by Intercorp, Nexus at the time. And also we have Maestro, that is a company that we'll use for our case study. Maestro is in the home improvement sector and was acquired by Falabella Group. We have then acquisitions or transactions to enter new markets or regions. Credicorp Capital invested in Colombia and in Chile, acquiring two different companies there to include in their portfolio. UNACEM, which is the cement sector, acquired Lafarge Cement in Ecuador. And Breca, which is the group Brescia, acquired Tricolor, a paint company. So these are also in Chile and Peru. So here we have examples of companies acquiring other companies in different countries to enter those markets. So in the first case, Chile and Peruvian companies entering Chile and Colombia, Peruvian company entering Ecuador, and Peruvian company entering Chile as well. Okay, companies entering, the last example, acquiring to enter or to acquire a new business segment. Here we have also Credicorp, and the example is when they entered the microfinance sector, acquiring Edificar and then Mi Banco. And we have a transaction we saw last time, which is also Falabella when they acquired Linio, which is a marketplace, an online marketplace company to enter this segment where they thought was going to be further growth in the future, not only through retail. Okay, so there you get a good idea of how these strategies are applied and why to obtain or to be able to be successful, an alternative to for these strategic decisions is to acquire companies or to sell companies if you're on the other side. Okay, now the schedule or the timetable that I mentioned. The letter or the font here is very small. I will zoom in to review briefly the typical schedule of an M&A transaction, which I think will give you a very good idea of what happens in a typical M&A process. But just before I zoom in, I want you to have a good idea of what the whole process looks like, okay? So I will go all the way here so we can see the different parts, okay? So a typical M&A process, we can separate it in two parts, and here we have phase 1 and phase 2. Phase 1, as you can see, is composed by the internal preparation of the company, a marketing phase, non-binding offers, and a brief preparation for the second phase. We will review what each of these parts really means, and we will focus one class in each section, so don't worry about understanding everything now, but I want you to have the big picture of what we will be seeing in the different or in the coming classes, okay? So the first phase, I would think that probably the most important date for this first phase is this one marked in red, which is the submission of non-binding offers. And probably the most important phase or part of this second phase is the submission of binding offers, both red squares, and probably the signing and closing of the transaction. Okay, now we will zoom in a little bit so we get to discuss better the different phases or the different sections, let's say. So we said in phase 1, we have the internal preparation of the company. So before going to a sales process, once the company decides or the owners of the company decide that they want to sell their company, they have to start preparing the company for sale, obviously. Because you don't want to go and sell your company, and once you sit down and start negotiating, you discover that there are things inside your company that you wish you had settled or organized or improved before selling it, okay? So usually you start the client and the investment bank that is advising. Usually you try to do it with experts or advisors that will help you organize your company and sell it better. And then you will understand probably better after this class what advisors can bring to this transaction, because they have gone through sales process many times and they can help you prepare better for the process and then probably help you in managing better the process as well. So usually bankers and clients or seller have a first meeting and a due diligence call or meeting to discuss the company. Here, usually the seller tells the bankers all about their company, they explain their business, they explain probably why they want to sell, they give some information on their different business segments, where they see growth, etc., etc., etc. And usually you have a visit, a site visit of the company, if it is a factory, if it is a plant, if it is a services company, you go to see some of the stores, etc., etc. And then you have a meeting with your client to discuss the company, to discuss growth, to discuss prospects, etc., etc., etc. And together you discuss who you think could be the best buyers for your company. Obviously, this will depend on if you as a seller or client want to stay in the partnership, if you want to sell 100%, etc., etc., etc. And you will discuss who are the best buyers for your company, who are the potential buyers for your company. And here, the investment bank can help a lot as well, if they can probably bring international players, if they have access to other companies that might be interested in acquiring this type of business. Okay, then the bankers usually, or the advisors, will do a financial analysis of the company. They will sit down with managers or with management or with owners, and they will discuss projections, strategy, growth, and based on the projections, they will probably do some P&L projections, cash flow, DCF, valuation, and they will come up with a valuation and value of the company. Okay? It is important to do a valuation of the company with a seller, or let's say advisors and sellers together, before going out in a process, to have a clear idea of what you are expecting in terms of value. And what happens? Sometimes what happens is that a client or a seller is willing to sell their company. They say, okay, this is the time for me to leave my business. I want to get some money back from all the work and the time that I have invested in this company. So I want to sell my company, but they maybe have in mind that their company is worth $300 million. And after the bank or the advisors do the valuation, they realize that the company is maybe only worth 100, and they are discouraged and they are not willing to sell anymore. So if they are discouraged and they are not willing to sell, you don't want to go through the whole process with potential buyers, marketing your company, showing your company to everyone, and then realizing that for the price that they are willing to offer, or for the valuation that makes probably sense in a market, your client is not willing to sell. So it's very important to have this conversation between advisors and sellers about valuation before embarking on a sales process and marketing your company and showing your company to everyone or potential buyers that could also potentially be your current competition. So you don't want to be showing a lot of information on your company unless you are sure that you want to sell, be sure that you want to go through a process and really effectively sell your company. Okay? So after discussing valuation and agreeing on what potential values you would be willing to get and you would be willing to sell, obviously you don't know if after doing a process you will get an offer for those prices or within that range, but after discussing it with an advisor, probably they will have some market views and some more experience to say more or less where the value of the company should be placed after doing some detailed homework in terms of valuation, doing valuation with discounted cash flows, doing valuation for referential valuation in terms of multiples, for the market, previous transactions, and other methods that we will also review in a lot more detail. Okay? So once you do your internal preparation, you will be ready to go to a marketing phase where we will not go into detail now of what is a teaser, what is an info memo, what is a process letter, what is an NDA, etc. But these are all documents that you will prepare during a marketing phase that you will show to potential buyers, and that you will, and information that you will provide them for them to be able to have some information on your company and potentially present an offer or a non-binding offer, okay? So you will prepare information together, advisors and client. Mostly the advisors will be doing the work here, preparing nice documents of the company to share them with potential buyers, and then wait for and give very strict instructions to potential buyers to get non-binding offers later on. You usually give at least 4 to 6 weeks to potential buyers after giving them some information to provide a non-binding offer. After receiving non-binding offers, you decide with your client which offers you think are serious, which offers are within the price range you're looking for and with the conditions that you would be willing to accept. And you start preparing a data room or further information and some presentations for the second phase of the process. And in this second phase, you will have mainly what is called a due diligence. And a due diligence is basically a detailed review of the company done by the potential buyers in order to be able to present a binding offer or a final offer, okay? They are then in the possibility of presenting a final offer because they have reviewed your company in a lot more detail. This usually takes, as you can see, more weeks. Here you can have 8 to 10 weeks that you will provide more detailed information of your company and legal documents, etc., to get a final offer. After getting these final offers, you sit down with those people presenting serious final offers, and you select your final offer and sit down for negotiations and closing, okay? All in all, as you can see, a typical process can last. This example shows 2, 3, 4, 5 to 6 months. Real life experiences, now I would say processes are taking a bit longer. Doing a process in 6 months is very successful. I would say between 6 months and a year is more fair now. And as you saw in the videos last class, one comment that was given by most of the analysts that spoke were saying processes are taking longer, there is more regulation, it's more difficult to do transactions than before, especially cross-border. Okay, now we will start with our case study, okay? So, I structured this case study. You can see how I would analyze a specific transaction if a transaction is taking place. So I will be showing you information as you would be getting the information in a real process. Obviously, we will only show what is public and then some insights from buyers and sellers that we got because we participated in this transaction when I was working for one investment bank involved. I was working on advising a buyer that in the end didn't buy, wasn't successful. So my client, let's say, was not the final acquirer, was not Falabella, it was an international group. But we had a lot of information on this transaction, obviously, because we participated directly in the process as well. Okay, so what would be the first thing that you see from a process if you are in the outside of the process? You will see, you can work with the press, okay? So the first thing to analyze a transaction or to analyze or review a case study is to do a news run, to look at the different news, at the different articles and press that was available previous to a transaction to understand how the companies were, and during the transaction to try to understand what was happening through the transaction, okay? So I will give you a little bit of background, then we will review some articles in the press, and then I will show you once the transaction is informed to the market, you have like the press release of the buyer or of the seller, if some of them are public, and then you have also some views of brokers, of analysts that comment on the transaction. If they think it was paid fairly, if they think they overpaid, if they think it's going to be good or not for the buyer or for the seller, and some views of the market. Okay, so we will review all those different pieces of information. And after this discussion that might finish this class, or we might end up a little bit into next class, I hopefully you will understand very well or better how this transaction took place and what happened and how the home improvement sector or how the home improvement market was reshaped when Maestro was acquired, was one of the largest players, was acquired by Falabella, that at the same time already owned Sodimac, which is their home improvement branch or arm, and became one of the largest players in home improvement market in the country, okay? Okay, so some of these news are obviously only in Spanish, but I will translate what's necessary and just whatever information you need to get, or the key messages that I would like you to take from the different parts or information that we will review together. Okay, so just a bit of background. This is way before the transaction took place. Enfoca, that is, as I told you last class as well, is the largest Peruvian private equity fund, acquired Maestro in 2010. They acquired the majority of Maestro from Home Center, or Ace Home Center as it was called, and they did through different funds that they owned. They had initially acquired a small stake and then of 8.95%, and then they acquired a larger stake, which implied obviously a majority stake of, so they acquired 8.9% and they acquired 93% of an 82% stake, okay? So in the end, they already had between 80 and 90% of the company, okay? So this is when private equity fund Enfoca acquired almost the majority of Maestro Home Improvement. Now, we will review the different news that were published by the press in 2014, so close to the time of the transaction, okay? And we will go into some of these news and we will review what's most important for you to get to understand this transaction a little bit better. But I want you to note something in the dates, okay? So the first piece of news that we will review is of 28 August 2014, okay? So on the 28th of August, we have a news published that the title is in Spanish, but what it says is, Enfoca denies plans to sell their home improvement stores Maestro, okay? They're denying a potential transaction at the end of August, okay? The next news is the 17th of September of the same year. So let's say 20 days after. 20 days after, what's the title of the news? Sodimac acquires 100% shares in Maestro for $1,404 million. Okay? So what is very interesting here is that you see a company denying they are planning a sale, and 20 days after, a sale is informed in the market. And all the news then that we will see are from the 17 September, 17 September, 17, 17, because that's the day of the transaction, so that's when you have more news. And then one news on the 18th, and some more news on the 22nd. Okay, this is probably some further information, and this one is probably some analysis post-transaction. So, first important thing to note, when companies declare to the market, usually, and this is usually happens, we are not planning on selling a company, and they're specifically saying it, it's usually because there are some rumors behind, and it's usually because they are planning on selling, and rumors and information has been filtered to the market, and given they are public companies, they need to inform the market, and usually they go out and say nothing is happening because they don't want to alarm different stakeholders. But if you have this sort of news in the press or in the news, usually is because there is something happening behind, okay? Okay, so here I will share some of this news, and we will review briefly what was said at that specific time, okay? Please bear with me a few seconds to try to make this work properly. Let's see. Okay, so the first one we discussed. Okay, hopefully you can see this now. Let me, bear with me one more second, please. Let me scroll down. Okay, so Enfoca denies they're planning to sell their home improvement store Maestro, and they say, Maestro confirmed that the real estate company is planning on selling some land that is not necessary, that is not required for the development of their business for a total value of 75 million. Okay? So they are saying they are not in any specific action or negotiation related to a potential sale of Maestro Peru, and this declaration is done by the CEO, Leonardo Bacherer, at that time. They say that they are sending this news to the regulator, confirming that they are not in the process of selling their company, and if they were to change the situation, they would inform accordingly as expected to the market. They denied information that appeared in different media about the potential sale, and given they were saying apparently this news that they were potentially selling this company because the company was having financial difficulties and they were no longer in the position to fight growth. Okay, he gives some specific declarations or information on liquidity of the company. They are saying that they don't have any liquidity risks, that their cash levels are adequate and appropriate for them to operate the company and to maintain growth the next years. They are also saying that they are planning to sell in the next 12 months some real estate assets worth of 75 million, and that this will further improve their liquidity position and deleverage the company, or the current leverage company situation of the company. They are saying that this land is not used currently for stores and was not planned for stores, that they acquired more than they were required for the stores, and that sellers wanted to sell bigger land and that they acquired it and that are in a position of selling. And they even give the locations. Okay, so coming back to our news, what was said was what was denied in the market is we are not in the middle of a transaction. Our company is financially sound, so clearly they want to give this message. So you also get the idea that there might be some questioning about their financial position, their liquidity, their ability to finance growth, their ability to pay banks, because they're mentioning that the company is leveraged. So they are already giving several keys to what might be happening with Maestro at that time. Okay, now we will share the next piece of news, which was 20 days after. Sodimac acquires 100% of shares of Maestro for 1,404 million soles. Sorry, I think I said dollars when we were reading the news. It was obviously soles. And we will see later in the analysis of the transaction what is exactly this figure they are mentioning. Is it enterprise value? Is it equity value? Is it the size of the transaction, including debt or not? Is it what is being paid for the shares? What are the implied multiples, etc., etc.? So information we want to get first from the press and then doing the proper analysis of the transaction. Okay, so what are they saying here? The company, Sodimac, that is part of Falabella Group, will finance the acquisition of will finance the transaction through a international financial entity. Sodimac at the same time will approve a capital increase of 420 million. Okay? They are saying the Chilean company Sodimac, part of Falabella Group, acquired 100% of the shares for a total value of 1,404 million soles, which will be financed the same by an international entity. The transaction was done through the Lima Stock Exchange because Maestro was listed at the time of the sale. Maestro is an entity, a Peruvian entity that currently has 30 home improvement stores that are distributed, sorry about that, that are distributed through the country by the brand of Maestro. They currently register annual sales for 1,469 million soles. So if you see the figure in their sales and the figure in the size of the transaction, we don't really know exactly if there's meaning enterprise value or equity value. We will discuss later, but it's very similar to the sale amount, so you can already be thinking of a transaction which is around one-time sales of the company and employs more than 4,000 people. So now we already have some figures on the company, their sales figure, number of employees, the number of stores, so we have an idea of the size of the company. Okay? With this transaction, Maestro will be part of Falabella Group, and they are giving some information disclosed by Falabella Group that they are going to be approving a capital increase for doing this transaction. So they are doing a capital increase in Sodimac So putting the money in Sodimac so that Sodimac as an entity acquires Maestro and then can absorb it or merge with it. Okay, so we go to our next piece of news. Okay, this one is mentioning, or also this one is from the 18th, so one day after they are talking about the market, and they say that the home center market is going to be reshuffled, let's say, or recomposed. That Sodimac will now own 70% or will hold 70% of the home improvement market after acquiring Maestro. Here they are obviously talking about large chains or retailers. Okay, in Peru there are only 3 large entities in this sector: Sodimac, Promart, and Casinelli. At that time, Sodimac, obviously there was Maestro, all with plans to continue growing the market, and Maestro's plans will depend on the new acquirer, obviously. So what they are saying is, now after this revealing news, we will now see how the market is composed. The first thing is that after this acquisition, Falabella will now own 70% of the market if you exclude all of the small ferreterias or all the small players, which are not the large retail sector, but the rest of the market. Are saying here, so or the modern channel, as you say, as you may speak of these large retailers, when they discuss the home improvement market and they say 70%, they are discussing this or talking about this modern channel, if which at the same time they say accounts for 33% of the total market. The rest is composed by the traditional channel, which are all the small ferreterias, as we know them here, and basically they mention all the large small clusters of this type of stores in the country, which account for obviously the majority, or the 77% of the 70%, let's say, of the market. But out of the 30 or 33% of the traditional channel, now Sodimac will own 70% of the market. So why would you have this sort of news? Obviously, there are antitrust concerns, and probably this analysis is discussed in a way that wants to alleviate, in a way, the concern of potential antitrust in this transaction, and don't wanting to allow a transaction or maybe a regulator observe and cancel a transaction given antitrust potential antitrust situation. As you might or know, or at least all locals should know, there is no real or specific antitrust rules. There is some regulation, and at that time there wasn't even that specific regulation in antitrust. It's only up for in the copy to maybe observe, but it's not in many other countries in the world where this type of transaction wouldn't be allowed. Okay, in Peru and in the last years there have been many transactions done where players acquire a large majority and there are no restrictions, and there were no real problems in allowing companies to do these transactions and having a vast majority of a potential market. Okay, so this piece of news was in a way trying to explain that the home improvement store, even though they would account for 70% of the home improvement store, this is only really 70% of the 33% that corresponds to the modern channel. Okay, so really what they're arguing is that it's not really an issue for antitrust entities or regulators to come to observe. Okay, then they mention again these pieces of land that were mentioned also by the CEO of Maestro before the transaction, and they say that they were planning also on selling these pieces of land to improve their operation, etc., and improve their financial situation. And they say that this is now obviously not under discussion because it will depend on Sodimac if they follow the projects or not. Okay, so basically what they're saying is what was said by the CEO is no longer valid. Obviously everything is sold now, and it will be Sodimac who will decide what they will do with these pieces of land that have been sold as well. Then they say about the market, they mention who the main players are: Maestro, Sodimac, Casinelli, and Promart. They mention the overall market, the growth of the sector, and they also give some information on their plans in the future, how many stores would be probably opened in the next year, and also they also give some information on Sodimac. They give also some information on the competition, on Casinelli, on Promart, and they even comment on the transaction itself. They say that the transaction, it was paid high for the transaction, but they see good potential in the transaction. So maybe overpaid, but with potential. That's the comment that is given by, and they mention a specific analyst or broker, La Reinvial, Chilean, so probably knowing well Sodimac and Falabella Group. Okay. They also mentioned that the news were well received by the pension funds. Obviously, the pension funds were invested in Enfoca, so they're one of the main beneficiaries of the transaction. And it was a transaction where, as they are saying, was in a way maybe overpaid or well paid, so the seller obviously is in a good position. And that they are also saying that this is viewed positive by the rating agency Moody's for the part of Sodimac, and also for the side of Maestro that was struggling a little bit with their credit profile. Okay, so some very long and interesting news regarding the transaction. So we have some ideas there on the market, on market shares. We have some ideas of views of brokers. We have some ideas of the situation that both companies were facing. We also get an idea of how the public might see the transaction, and some comments on trying to protect the transaction or the operation, giving some justification as to why this shouldn't be considered by the antitrust regulator. Okay? Some additional information in some others. Let's see. Hopefully some more figures here. So okay, so what do we see here? We say okay, according to the regulator, the acquisition will be financed with an international, we already read this, with an international loan and with a capital increase. But here we see a table that is very interesting, okay? Why? Because they are giving a print screen of the transaction. And this is a print screen of the Lima Stock Exchange transaction. And we can see here the amount mentioned and negotiated that says 1,403,915. So the 1,404 million soles that have been discussed or are being discussed. And they're saying that this amount is negotiated for this number of shares. So now we have a first real information. Obviously, we can see it in the stock exchange if it is a transaction that is done through the stock exchange. And we can see that the price of 1,404 was the price paid for the shares. So this is equity value, not enterprise value, okay? So now we know that the enterprise value that was paid for this company, that is usually the metric that is used for multiples, is going to be larger. Obviously, it's going to be, if you don't know, enterprise value equals the equity value plus the net debt of the company, okay? And we know that the debt of the company was of relevant size. So we should be expecting an enterprise value larger than this 1,404 million soles. Okay, so we already know that this was equity value, and we can have now some more information to be able to start calculating some multiples. And why are we interested in calculating multiples or in knowing multiples? We will be looking at comparable traded companies, at comparable transactions as part of our valuation class when we have the valuations section. But obviously, all of you in your previous courses in the faculty that you are following, most of you economics or finance or business administration probably have already taken different evaluation classes, and you already know not only how to do a DCF, but also how to look at comparable trading companies, comparable transactions, which are reference metrics for valuation. And if we are able to do some multiples and to know what the enterprise value or the price paid for a company was, and divide it by, depending on the sector, its EBITDA in the last year or in the last 12 months, or its expected EBITDA for the following years, for some sectors, or the price or enterprise value divided by equity or by net income, depending on the sector that we're looking at, we can compare it with multiples at which similar companies in the same sector trade, or similar multiples, or multiples at which companies in the same sector were sold previously in the market, and assess if the transaction makes sense or not, if we think it was overpaid or underpaid, or if it was paid fairly, or if it is paid according to what the market should expect or not. Okay? So it's very important to have these multiple references. So it's very important that everyone here understands that we can take information from public sources, from the press, and start building our multiples and our information and our own case to assess this acquisition or this transaction, to have our own views, because we can read the press, we can read different analysts, but what is important is that each one of us can be capable of making their own assessment of the transaction. What do you think of the transaction? Do you think it was a good transaction for Falabella? Do you think it was a good transaction for Maestro? Do you think now, more than 10 years later, or in 10 years time after a transaction, or 5 years later, was it a good transaction or not? Was it well paid or not? And then you learn from these experiences for future transactions as well, okay? So, they say, the decision of Enfoca to sell the home improvement stores comes in a year that hasn't been positive for this market. And that they had destined most of the resources for their aggressive expansion. So it ended up leaving company leveraged or over leveraged, okay, with too much debt. Okay, so everyone is mentioning that they were not in a good situation, but on the other hand, they also say that the company was in a difficult situation, but they're also saying that it was very well paid or overpaid. So does it make sense that you buy a company in a complicated situation and overpay for it? Shouldn't those people selling, if they're in a complex situation, be potentially selling at a low price because they need to sell? So in order to understand better, we have to deep dive a little bit into the numbers and to understand what happened, okay? So they say that according to Bloomberg, the debt ratios had increased in the last 2 years, while they were practically doubling the number of stores in Peru, reaching 30, okay? They are also saying that the executives in Falabella announced it this morning to everyone in their stores that the chain competes with Maestro, with Sodimac in home centers, obviously. I mean, the information for their employees. They are asking to themselves, I guess, a question if they are going to be closing, if they are going to be merging, if what they are going to be doing with those stores that are close by. Will now they be dominating the market? And with the only smaller competitor being Promart, also Chilean. They are also saying that Promart, they know that they were trying to participate in this process, even though Enfoca already had an agreement with Falabella for them to acquire the store or the company. And they also mentioned that they had process being advised by Morgan Stanley, and that in the process, at least 5 buyers were participating. They also say that besides Falabella and Intercorp, there was an American private equity firm or financial investor and a large European investor as well that was willing to to enter the Latin American market with this operation. Okay, so we get more information here regarding the process. We already get some indications as to potential competition in the process. Okay, so we know they were advised by Morgan Stanley, so they had financial advisors. Actually, they were not only advised by Morgan Stanley, they were advised by Morgan Stanley and Merrill Lynch. Both banks were advising the seller, so Enfoca. And Falabella did it by themselves, they had no advisors. And here in this article, they are mentioning that at least 5 groups were trying to buy. So they were at least 5 potential buyers interested in acquiring this company. Okay, so here there is some further indications as to why probably the price paid was high. If there is competition, the prices will reflect that, okay? If you have a process where you have little or no competition, it is very difficult to obtain high prices unless you manage very well your process and you don't let others know that there is no real competition, okay? So, going to some further news, and we are soon going to be finishing with this news, but as you can see, when we go through this news, we discover details of the transaction that are very interesting and that will make us be able to build our case, okay? So, now, and you have the links to, you will have the links to all these news in the presentation in case you want to review them anytime or you want to see any details, or if you are interested in more information of the transaction, okay? Now this news, what are they saying? It's the era Falabella, the future of Maestro after its acquisition by the Chilean group. Okay, they say with 40% market share in the modern channel, Maestro could overcome the, I'm sorry about that, could overcome the concerns about their financial situation. A merger with Sodimac could also appear in the new outlook or panorama, okay? Then they say, no openings programmed for this year, the outlook, negative outlook for margins, low liquidity. In the last years, the credit situation of Maestro had been generating concerns, and there were rumors about their sale in the market. Even the CEO denied negotiations, but it was a matter of time. A week ago, Fitch Ratings downgraded their downgraded the company, and Moody's also went from B+ to B with a negative perspective or negative outlook. The decrease in their ratings reflects the deterioration of the credit metrics of Maestro. And the negative perspectives show the concern about the capacity of the company to reverse the negative trends of margins, their leverage, and liquidity in the next months. So based on this news, you would say the company was really going through a difficult time, okay? Also because if you were following at the time of the transaction Maestro, you would see that rating agencies were downgrading them. So financing for them was becoming more costly, and also the trends of the market were not the best. Negative margins and less growth, etc., etc. So what they are saying is, with the acquisition of Falabella, they have obtained a promising twist. The market has seen the transaction with good eyes, and minutes after the acquisition, Maestro bonds are already improving. They say that the Falabella owners' families, Solari and Del Rio, that acquired Sodimac in 2003, now have acquired 100% of Maestro, and they are thinking that potentially there will be a merger between the companies. They have now added to the 25 stores of Sodimac the other 30 stores of Maestro, and they are saying that this is part of their regional growth strategy, and they are also mentioning their commitment with the country, development, growth, etc. Always being Chilean and acquiring companies in the Peruvian market is challenging. They have done it many times, but Chilean groups are always seen with, let's say, caution, and it is not what is preferred by regulators. So obviously this comment of the owner saying that they are committed with developing the country and the sector, etc., is very relevant and important. Okay, so back to our other news. Okay, so we saw different news in the press, and now we will see a very brief, but I want you to get also an idea of the announcement by credit rating agencies. This is what Moody's published following the acquisition. Okay? So first we need to see who is Moody's covering. Are they doing this report for Maestro, or are they doing this report for Falabella, to see how their note is focused? Okay? They are saying Maestro Peru's acquisition by Falabella is credit positive. Maestro, which was Ba3 negative rating by them, announced today that it was acquired by Sodimac Peru, a subsidiary of Falabella, for approximately $492 million. Prior to the transaction, Maestro was controlled by Enfoca, a Peruvian private equity fund. Moody's sees a transaction as credit positive, considering that Maestro would benefit from the support provided by its new 100% shareholder Falabella, one of the largest retailers in the region. Obviously, Moody's is doing the credit rating of Maestro. Okay? Headquartered in Lima, Peru, Maestro started operations in 1994, is one of the major home improvement retailers with 30 stores across the country. For the last 12 months, reported revenues of 1.5 billion soles, approximately $540 million, and adjusted EBITDA of 158 million soles, or $56 million. Let's stop there a few seconds. So now, we knew that the amount 1404 or $492 million let's see, 1404 divided by 4. We know that that was the equity value. And we also know now from the information that is provided by the rating agency is that Maestro had reported revenues of 1.5 billion soles or $536 million, and EBITDA figures is the first time we see EBITDA figures of 158 million soles or $56 million. Okay, so we can start gathering our figures in order to be preparing our multiples. So we will just take note of those figures and we will continue. Grupo Falabella is a regional retailer with operations in Chile, Peru, Colombia, and Argentina and Brazil. For a 12 months ended in 2014, they give the sales, they give the number of department stores, home improvement stores, supermarkets, shopping centers, and all that they own. Some brief overview of the group. They own a portfolio of different accounts, and they also provide some figures in terms of EBITDA, profit, etc. of the group. So very brief note saying that it's credit positive and giving some further figures on the transaction. And now we will go to I think we have more, but I think I'll choose the last piece of news, and with that we will go to the analysis, the internal analysis done of the transaction. Okay? So in this news, we are a few days after the transaction, so on the 22nd of September, 5 days after the transaction, we get some information focusing on what the impact of the transaction might be or what's the reaction of the market following the transaction. Okay? So it says, the shares of Chilean Falabella Group have gone up strongly, let's say, following the acquisition of Maestro. Chilean retailer, let's say, acquired on Wednesday the home improvement store Maestro for around $490 million, becoming the largest player in this sector with interesting growth or potential growth, let's say, or fast growth sector. Okay? And then what is interesting about this news is the shares of the group were going up following the announcement of the company of the acquisition. So obviously this means that the market has taken the acquisition positive, not only for Maestro, as we saw when we reviewed the credit report or the credit note done for Maestro by Moody's, but also by the market, which is looking at the impact for Falabella. The shares are going up, so this means the market is viewing the transaction as positive. They are saying that the shares are growing or gaining 2.32%, and they're giving some details on the transaction. They are saying that they acquired for 490 million. They are becoming the largest player in this sector, which is fast growing. They are saying that the transaction is consistent with the objective, with the long-term objectives of the group, and that it seems reasonable. These are the views of Citibank Chile, an analyst covering Falabella. They are also saying that in a recent interview with Reuters, the CEO of Falabella, Sandro Solari, had, I think had mentioned the opportunities that Peru represented for them, the high growth potential, and the high informal sector that there was in that specific sector or segment. Okay, the acquisition of Maestro was done just before closing on Wednesday and made the shares of Falabella go up 2.1%. Apparently there were some holidays and weekend. This is why it's more than a couple of days later. It's not the following day that the shares are going up. It's about 5 days after, because they had their holidays. Okay, so now we understand a little bit how the market reacted. So the market initially saw it as positive, with the shares going up more than 2%. Okay. I think with that, we will stop on the news. Obviously, we can spend a lot more time looking at news and information of the time, and we can get a lot more information. But as you can see, only looking at a few articles, we already have, and from press, rating agency, and the market, we already have a good idea of what is happening or what happened with this transaction. Not only regarding how much was paid, but also what was happening with the company before, what might be the impact for the acquiring group, and other factors. Okay, so you will find these are the links of the articles that we have discussed. There are more links here than what we've reviewed. I have chosen some of these links only, and in the end, you also have a video, a YouTube of some reporters commenting on the transaction. If you're interested in having more information, you can also see it. We will not spend more time in this because most of the information that we have seen through the articles or through the links is also covered in the video. Okay, so this is also some very relevant document. This is the company's press release. Given Falabella is a listed company or a listed group, they are required by regulators to disclose or to publish a press release whenever they do a relevant transaction, and the information that is usually, this is usually done through a press release giving the financial details of the transaction, and this is the press release issued by the company on the day of the transaction. Okay. So it is also always very important to read the original source of information, because you can look at the press, but the press sometimes makes mistakes. The press sometimes, depending on the source, might give information that is not that accurate or might make mistakes unintentionally. So it's always good to go to the main sources, which is directly the accompanied press release. Okay, so Chassis Falabella acquired Maestro through its subsidiary Sodimac Peru. The transaction included 100% of Maestro Peru shares for $1,405 million, approximately $492 million. So here we see the exact numbers, and obviously the 492 depends on the exchange rate that is being used, but probably they are giving the official exchange rate for the day of the action, which is what makes sense to be used. Okay? So, with this transaction, Chassis Falabella reaffirms its commitment with the home improvement market growth in Peru. September 17, 2014, Santiago, Sodimac Peru, a subsidiary of Falabella, acquired Maestro Peru by purchasing 100% of its shares in the stock market for an amount of 1,405 million soles. The transaction was made through the Lima Stock Exchange, the BVL, the Bolsa de Valores de Lima. The CEO of Group Falabella, Sandro Solari, noted that this transaction is part of our regional growth strategy and reaffirms our commitment with the development and growth of the home improvement sector. The corporate CEO for Sodimac, Enrique Gunderman, reiterated that the new company, which will integrate the capabilities of Maestro and Sodimac, will continue contributing, developing the market, benefiting Peruvian families and specialist workers who will find on our stores good quality products at convenient prices. Maestro started its operations in 1994, currently has 30 stores, 17 located in Lima, the rest in provinces, 182,000 square meters of sales area. Out of the 30 locations, half are owned and the other half are rented to third parties. The company owns 190,000 square meters of land for real estate developments and future stores. At the end of 2013, the company reported sales of 1,469 million soles, or $514 million, an EBITDA of 133 million soles, or $47 million, and employs more than 4,000 people. Okay, so these are the official figures provided by the company. So if you ask me, which figures would I use to do the multiples calculations? Would they be those that were disclosed by the press? Would they be those disclosed in the press release? Probably the ones in the press release. You have to consider that here they are reporting the sales and the EBITDA at the end of 2013, but the transaction was done in September 2014, and probably the other figures that were disclosed by the credit rating agencies or by press might be figures for 2014 or the last 12 months reported in either August or July or the previous quarter, or so you have to be careful which figures you are taking. Here we know officially the figures for 2013. Okay? Then they give a brief mention on Sodimac and Falabella. Sodimac started their operations in 2004, and they're giving some financial information from Sodimac that is not that relevant now, and they're giving some information on Falabella Group. Okay, so now you have an idea of what the press release of the company doing the acquisition looks like. Another important source of information, so we have looked at press information, news run, then we have looked at credit opinions or credit rating agencies reports. We have looked at, through the press, some of the impact in the market. We have looked at the official company press releases. And another source of information that's very useful to analyze a transaction is any information on market. So if you have any market study, if you have any public information on the specific sector in which the transaction is taking place. It's very useful because it allows you to understand better the market. For example, many people here in this group who are mostly the exchange students, probably don't know Maestro or didn't know Maestro, and probably know very little of the home improvement market in Peru. So if you have access or if you're able to get a hold of some information, sometimes public, sometimes you ask for it, sometimes you buy it, sometimes you have it in the university library, it's useful to have some market trends, some market information, market shares, what is the shares of the different companies, how is the market composed, etc. So I will show you a few slides that were performed by Apoyo Consultoría, that is providing market information and specific information on the home improvement market. Unfortunately, this is also in Spanish, but we won't read all the details. I just want you to focus on some of the graphs and on the key messages provided in the presentation. So you get also a feeling of the market, of the home improvement market at the time of the auction. Okay, so the home improvement market in Peru, or the chain, multiplied by 4 in the last 6 years. This is what they're saying. And we have two graphs. One is showing the sales, the income or the sales of the main operators. So how the conglomerate sales of home improvement companies increased from 2007 to 2013. So in 6 years, the sales went from between, let's say, around 800 million to, let's say, 3,200 million soles. So what they are saying is they have grown by 5 times, 6 times, depending on the exact numbers, okay? So massive increase in sales for the sector, okay, in the last 6 years. And they are also saying what is the size of the market if you look at number of stores. So in 2007, what were the number of stores if you add up all the home improvement stores only looking at the modern channel? There were between 10 and 20 stores, and they grew to somewhere between 60 and 70. So again, this they are putting times 5. Maybe here it was times 4, times 4, times 5. So clearly, it's a sector that has been having a very interesting growth in the last 6 years, okay? From 2007 to 2013. In some of the news or the press, we read that 2014 hadn't as good, okay? So maybe there is a slowdown in 2014, but the previous 6 years were 6 years of enormous growth, okay? Let's say bonanza for the company. Okay, what else about the market? They are saying that the modern channel represents approximately 20% of the market. We saw in the press that they were saying that the home improvement market was around 30%. Well, maybe given that gigantic growth, that 20% became around 30 in terms of sales if from 2013 or 2012 maybe to 2014 the situation improved, but also it might be just different sources used to calculate. And if you're including the traditional channel, which is millions of small stores, it's very difficult, maybe not millions, but thousands of small stores, it's very difficult to to estimate this total market size. But anyways, we know that they are between 20 and 30% or 20 and 35% for the modern channel, okay? What in terms of the modern channel? Who were the main players at that time? At that time, the main players were, for home centers, Sodimac, Maestro, and Promart. Here are the sales figures for 2013, 550, 540, let's say, and 120. So you can see Sodimac and Maestro were more or less leading the market, very close from one another, with a similar sales level and way larger than the third player in the market, and the number of stores, 22, 30, and 12. This is also very interesting because you see that Maestro is having similar sales, maybe even a little lower, with a lot more stores, 30 with 8 more stores. So this also gives you an idea of maybe how they are managing their stores, or maybe their business mix within the store, or maybe the size of their store, the products, but it gives you an indication, okay? And then you also have some specialized stores that are included in the modern channel by Apoyo, which are Casinelli, Decor Center, Casa Ideas, and Castor, which by size you see are smaller, and they are not, they are competitors of Sodimac and Maestro in some of their lines of business, but not. Sorry, there was an interference there. Was someone trying to ask a question or? Okay, if you have any questions, please let me know through the chat, and I'll try to answer briefly. Okay, thank you. So here you also have an idea of the number of stores and the size of these players, and you have an idea now of the whole market. So you know who the players were, who competition was, and only looking at this slide and knowing how the market is shaped, you might also have an idea or get an idea of who potential competition was. So we already know that Sodimac were the ones that acquired Falabella, but we already know as well from the news that probably Promart, through Intercorp Group, was participating in the process. No one mentioned these other smaller groups, except for someone specifically saying that Enfoca was also invested in Caselli. That gives you also some further information. Okay, so let's continue with the overview of the market. Let's see, we have 3 more slides that we'll try to cover this class, and then we will continue next class with the analysis of the acquisition, and some views from the inside that I can provide as we participated in the process, and some of the results and broker views, okay? So we will finish with the slides in the market. Okay, so they are saying that 2014, there has been lower growth or deceleration of the construction sector, which obviously is directly related to the home improvement sector, because these are the materials used for, or the materials used for construction are sold in the home improvement store. So there was a contraction in the construction sector in the country in the last quarters in 2013 compared to the beginning of the year, and also in the first quarter of 2014 when it was negative, okay, or maybe reduction here and contraction here. And this is the construction sector. Same, the constructions or the GDP of construction sector in red, and these are the same store sales of Sodimac, which is the largest or was the largest player in the sector. So there is a contraction in the GDP of the construction sector, and there is also a direct decrease or deceleration in the same store sales of the largest home improvement player in the market. So the same store sales, why you use same store sales? Because you don't want to mix up. If they are opening new stores and you include the sales of those new stores, it's not really comparable to see if they have grown or not. So to exclude the impact of the new stores open, you look at how the same stores sold versus the previous year, okay? And then you can see here, this is the percentage growth in sales for the largest two operators in the market, okay? So the sales growth for Sodimac and Maestro in the previous year. So they grew, let's zoom in a little bit. They grew 19 or 20% in 2010, 37%, 20% in 2012, 19 or 20% in 2013. So let's say around between 20 and 40% in the last 4 years. And in 2014, they were expecting to grow half what they had grown in the previous years. So obviously, a more pessimistic view on the market for the sector. Okay, we will see here as well the evolution of the number of stores for each brand of the largest players. So Sodimac, Maestro, and Promart in 2012, 2013, and 14. So we see they have all been growing in number of stores: 18, 24, 27, 23, 29, 32, 5, 12, and 18. Okay, so the clear trends for growth in the last years in terms of number of stores. Despite the sector not being able, or the sector not growing as much in 2014, there were still many stores open in that year, probably because they had started to be built in the previous year and they finished the stores in 2014. And here they are saying, this one is not that relevant because it's focused on the different provinces. And this one, which is focused on the margins, okay? And the benchmark of margins. We already read in some of the press releases or in some of the news that the margins had contracted for the sector. And here we see the EBITDA margins for 2013 international. Home Depot, 13%, Maestro in Peru, 12%, Sodimac in Chile, 8%, Easy in Chile and Argentina, 8%. We also see an interesting indication that the margin for Maestro in Peru is larger than for Falabella Group in Chile. So it's obviously always interesting to have a company that has larger margins than your overall margins, because it will probably make the transaction accretive. Okay, so we will continue next class with the case study. Hopefully, until now, you have found the case study interesting. Please let me know if you have any questions and we can discuss them as well next class. I didn't get any questions in your chats now, so if you come up with any questions until next week, let me know next class at the beginning or you want, and we will finish this case study next class and continue with the next topic. Hopefully you liked the topic and the development of the case study, and hopefully at the end of this analysis you will understand better both the home improvement sector in Peru and also how at least I would analyze a transaction and hopefully give you some guidelines in order to be able to do the same in the future. Okay, here I have a question, maybe I can answer it before everyone leaves. As Falabella Peru was also trading, should we expect its stock price to rise, or it just creates value for the current company in Chile? Since the acquisition was done through the Peruvian operation, because it was done through Sodimac, they were injecting capital in Sodimac to be doing the transaction. So what they were planning to do was to probably merge both companies. Obviously, the impact should be expected everywhere and should be priced in Peru if there is an direct impact in Chile. If the acquisition was done separately and there would be no impact, it would depend if they would merge it with Falabella Peru or not, because one thing would be to merge it with Sodimac and the other one merge it at Falabella Peru group level, which in both cases should have impact. Hopefully I answered that question. If you have any further questions, please let me know for next class. We will finish the case study and we will continue then. Thank you again for your patience given the circumstances and the way to do the class. Usually it's a little bit more entertaining because it's face-to-face and we can discuss a little bit more, but I've tried to at least provide some information that you can read and you can see directly, and it's not just only listening to me in the background. Okay, thank you and goodbye. See you next class.